Good evening, friends. Welcome to the YouTube channel, Advocate Amit Kumar Gupta. In my series on the income tax cases, today I am going to discuss a very important case. The name of the case is Principal Commissioner of Income Tax versus Future First Info Services Private Limited. This case has been decided by the Honorable Delhi High Court and the case has been reported in 447 ITR at page number 299. The judgment is very recent and the date of the judgment is 14th July 2022. Friends, as we know that TDS provisions are very tedious in nature. They are very difficult to understand, they are very difficult to digest, and there is a lot of litigation in the TDS provisions. The first litigation comes whether to deduct the TDS or not. The second focal point comes whether to deduct the rate, whether to deduct the TDS at a 10% or 2% or a higher rate or lesser rate. In this present case, the assessee deducted the TDS and the assessing officer alleged that this TDS rate is not adequate and you have to deduct the TDS at a higher rate. Because of this reason, the assessing officer made the disallowance under section 40A clause IA, which says that 30% of the expenditure will be disallowed if the TDS is not deducted. The second issue was that the assessing officer was alleging that excessive payments have been made to the directors as a director's salary, and the assessing officer disallowed ad hoc 50% of the salary which was paid to the directors under section 40A subsection 2 clause B. When this matter came to the CIT and the ITAT, the relief was given. So the department was before the Honorable Delhi High Court. Delhi High Court said that when the assessee has deducted the TDS, but the rate of the TDS is not proper, meaning thereby that if the TDS has been deducted at a lesser rate and the assessing officer is alleging that TDS should have been deducted at a higher rate, so in that case the department has to resort to the section 201 which says that consequences in case of non-deduction of TDS. But when the TDS has been deducted and it is alleged that the TDS is deducted at a lower rate, you cannot make the addition under section 40A clause IA. 40 clause A clause IA can be applied only when the TDS is not deducted. But if it is deducted and deducted at a lesser rate, then you cannot apply section 40A clause IA. So the best recourse of action available to the assessee in this particular case was that the assessing officer must have applied the provisions of section 201. Now the second issue comes that when the assessing officer made the addition on the basis of the excessive payments, the assessing officer alleged that this is not as per the market rate. But the assessing officer has not brought on record that what is the market rate, how much is it is excessive, and it was a mere blanket allegation and ad hoc addition of 50% was made. So on this point, the High Court said that if you want to make the addition, then you have to prove that the payment is excessive. And how the payment can be proved excessive, then you will give the comparative figures that what should be the actual remuneration to the directors. You cannot sit on the armchair of the assessee and decide what should be the remuneration or not. You have to decide from the market forces that this should have been the salary and this salary has been paid to avoid any of the provision of the Income Tax Act. So on both the grounds, the Delhi High Court decided in favor of the assessee. First was that when the TDS is deducted at a lower rate, you cannot apply section 40A clause IA, you cannot make the disallowance under section 40A clause IA, you have to go for section 201. And the second issue was that without, in case you want to make the addition under section 40A subsection 2 clause B, that is disallowance in case of excessive payment to the relatives, then in that case before making the addition you have to prove on the file, you have to bring evidence on the record that this much payment is excessive, and that also by giving a proper opportunity to the assessee for explaining his case. So friends, in In both the matters, the assessee gets its case, and this is a very worthwhile reading judgment for understanding the provisions of section 40A clause IA and section 40A subsection 2 clause B. At the end of this deliberation, I am once again repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus Future First Info Services Private Limited. Thank you, friends.